Hey everyone! If the stock market sounds confusing or intimidating, you're in the right place. Today I'm breaking down the basics of investing. And I promise, no fancy jargon, just facts and simple data. Let's start with the big question. What is the stock market? Imagine the stock market as a giant marketplace where people buy and sell little pieces of companies. These pieces are called stocks or shares. When you buy a share, you literally own a small part of that company. Now, you've probably heard about the S&P 500 or the Dow Jones. These are indexes, which means they're groups of stocks bundled together so we can track how a whole section of the market is doing. For example, the S&P 500 includes 500 of the largest companies in the US. In the last 50 years, the S&P 500 has returned, on average, about 10% per year before inflation. That means historically, if you invested $1,000 and left it alone, you could have had over $14,000 after 30 years. Of course, past results don't guarantee the future, but data like this shows why so many people invest. So how do you actually invest? Most people use brokerages. Think of them as online shops where you can buy and sell stocks. There are tons out there, from beginner-friendly apps to more advanced platforms. And you don't need a ton of cash to get started. Thanks to fractional shares, you can invest with just a few dollars. Let's talk risk. Stock prices go up and down, sometimes a lot, and nobody can predict the market perfectly. That's why you hear about diversification. If you spread your money across lots of different stocks, you lower the risk that one bad company will ruin your whole investment. Data shows that diversified portfolios, like index funds or ETFs, tend to perform better over time than just picking a few individual stocks. Now for a super important concept: compound growth. This is when your money earns returns, and then those returns start earning returns too. If you invest early and keep adding even small amounts, compound growth can turn tiny investments into serious money over decades. According to Vanguard, people who start investing in their 20s could end up with twice as much as those who start in their 30s, just by giving compounding more time to work. So, to wrap it up, the stock market isn't magic or a game for experts only. It's a tool that, with a little knowledge and some patience, anyone can use to build wealth over time. Remember to start small, do your research, and let the data, not emotions, guide your decisions. If you found this helpful, hit like and subscribe for more beginner-friendly guides. Thanks for watching.